Welcome back to the deep dive. Today, we're really getting into something that's probably on a lot of minds here in Austin.
Definitely that big question.
Yeah, exactly. Should you sell your home now, or is it better to wait? It's a huge decision, right? Big financial implications, impacts your plans.
It really is. And the market dynamics right now make it even trickier.
So, our mission today, essentially, is to act as your guides. We're doing a deep dive into the Austin housing market, sifting through the data.
Trying to cut through the noise. Yeah.
Exactly. We've got comprehensive analysis, real expert data, and we want to sort of transform all that information overload.
Make it understandable, actionable, into something you can actually use, giving you that core knowledge to make a truly informed choice for you.
That's the goal. And what's really striking, I think, is just how fast the narrative has changed. As of right now, July 2025, the Austin market is, there's no other way to put it, it's navigating a major correction.
The correction phase? Yeah, the data points we're seeing paint a very, very different picture from just a few years ago.
All right, so to really wrap our heads around this correction, where do we start? What's like the first metric you look at to see who's got the upper hand, buyers or sellers?
Good question. The first place I always check is the sold to list price ratio. It directly reflects, seller leverage.
Okay. And what's that telling us now?
Well, as of July 2025, it's fallen to 97.2%.
97.2.
Yeah. And, context is everything here. That's not just a number. It's the market saying, look, seller leverage is really diminished. It's actually the lowest reading for July since way back in 2011.
2011, so post-financial crisis era.
Exactly. Back then, it was 96.8%, still feeling the effects of '08. Now, think about the contrast. Just 4 years ago, peak pandemic frenzy.
Oh, I remember. It was wild.
It was. That ratio hit 106.6%. So sellers were getting over asking consistently. Today's 97.2%. That means the days of dictating terms are pretty much gone. Sellers are conceding more.
A massive swing. So, okay, sellers aren't always getting asking price. Does that automatically mean we're seeing widespread price drops on listings? Or is it more just like tougher negotiations behind the scenes? What's happening more?
It's really both, but the public price drops are definitely widespread, very visible.
How widespread?
As of July 7th, get this, 56.9%. So well over half of all active residential listings in the Austin area have had at least one price cut.
Wow. Over half.
Yeah. And it's not just a few sellers testing the waters and pulling back. It suggests, broad market resistance to those initial asking prices. And in some spots like Georgetown, Pflugerville, Round Rock, it's even higher. Over 61% price reductions there.
So the market's really pushing back hard on initial optimism?
Very much so. It's signaling those original prices are just out of sync with what buyers are willing or may be able to pay right now.
56, almost 57%. That really paints a picture. It feels like sellers are facing some serious headwinds. Now, beyond the prices themselves, what about just the sheer number of homes for sale? Is inventory piling up?
Oh, absolutely. Piling up is a good way to put it. Active residential listings are sitting at 17,747.
17,000.
Yeah, and that's only slightly down from the all-time record high, which was 18,076, just like 10 days before that, end of June.
An all-time high. Higher than pre-pandemic.
Well above pre-pandemic averages, yeah. And also significantly higher than the peak we saw last year in 2024, which was around 15,500 in mid-July.
So way more houses on the market now than even last year's peak.
Correct. And what that means practically is fierce competition among sellers. Intense pressure pushes prices down naturally, and it means homes take longer to sell. It's getting close to saturation in some ways.
Okay, this leads me to something I find really interesting. The balance between new homes coming onto the market versus homes actually going under contract pending sale. How does that look?
Right, that's the new listing to pending ratio. And honestly, this metric might be one of the most concerning right now for overall market health.
Okay.
It's currently at 0.45.
0.45. What does that mean in plain terms?
It means that for roughly every 2 new homes listed for sale, fewer than 1 is actually going under contract.
Oof.
Yeah. And what's really striking here is that 0.45 is the lowest level for the month of July in over 2 decades.
2 decades?
A healthy balanced market usually sits around 0.80, so 0.8.
Big difference.
Huge difference. This 0.45 ratio, it signals a market that's kind of stuck. New supply keeps rising, but the buyer demand just isn't there to absorb it at the same rate. It's the strongest sign in 20 years that the market is waiting for buyers who just aren't materializing in the numbers needed.
That really clarifies things. Now, the classic measure, months of inventory, MOI, that usually tells us clearly if it's tilted towards buyers or sellers, right? What's Austin's MOI saying now?
Austin's MOI is currently 6.32 months.
Over 6 months.
Correct. And by, the traditional real estate benchmarks, anything over 6 months is firmly considered a buyer's market.
And how does that compare to Austin's usual?
Well, Austin's long-term average is typically closer to 4 months. So jumping up to 6.32 is a pretty significant decisive shift.
So definitely a buyer's market overall.
Clearly. If you're a seller, you're not just competing with your neighbors anymore. You're in a much, much larger pool. And it gets even tougher in some specific submarkets.
Like where?
Well, Marble Falls, for example, is sitting at 11.0 months of inventory.
11.
Yeah. And places like Smithville, Dale, Spicewood, they're all over 10 months. That's really challenging territory if you need to sell there.
Wow. Okay, so inventory is high, sales relative to new listings are low. What about the actual buyer enthusiasm? Are people still out there looking, making offers? Has that energy faded?
That energy has definitely waned. We measure this using something called the activity index, and it shows buyer demand has weakened noticeably.
What are the numbers there?
The index is at 19.5% right now. That's down from 23.1% just a year ago, and significantly below the peak levels we saw during the boom.
And what does that lower activity mean in practice?
Well, the direct results are pretty straightforward. Fewer showings scheduled for listed properties. Homes are sitting on the market for longer periods, significantly longer days on market,
Right.
and a much higher chance that sellers will need to negotiate on price or maybe even throw in other incentives, closing cost help, things like that, just to get a deal done.
Okay, so we've got tough negotiations, lots of price cuts, sky-high inventory, slow absorption, and now weakening buyer interest. Adding all that up, what's the final impact on actual sale prices? Have they just plateaued, or have they really come down from the highs?
Oh, they've definitely retreated.
Yeah.
Both the median and the average home prices are down significantly from their peaks back in 2022.
How much are you talking?
The average sold price in Austin is down 16.4% from that peak.
16%.
And the median price is down 15.3%. So this isn't just like a slight cooling or leveling off. It's a real measurable correction in values.
Which means for anyone who bought right at the peak.
Yeah. Unfortunately, that translates to some pretty substantial equity erosion for those buyers.
Okay, that brings us to a really practical point from some of the detailed data. We know prices are down overall and negotiations are happening. But how are homes actually selling compared to their list price, like on a deal-by-deal basis? Are bidding wars completely dead?
That's a great question. And the shift here is, well, it's stark. Looking at July 2025, 67.3% of properties actually sold for under their final list price.
Wow, over 2/3 selling below list.
Exactly. Now, just to give you that contrast again, back in May 2021, only 13.3% sold under list.
13 versus 67. That's a massive flip.
It perfectly illustrates that dramatic reversal in seller leverage we talked about. And on the flip side,
The selling over list price?
almost vanished. In July 2025, only 11.8% of properties sold over list.
Just under 12%, and the peak was...
The peak for selling over list was April 2021, when an incredible 72.6% of homes sold above asking.
72% down to less than 12. So, yeah, bidding wars are largely a thing of the past for now.
Pretty much. It's not just a dip, it's almost a collapse of that whole phenomenon. And this isn't just in one or two trendy areas. It's widespread.
How widespread?
The data shows 90% of cities in the Austin area and 93.3% of zip codes had properties selling under list price this past month. It's almost everywhere.
Okay, that gives us a really clear picture of where things stand right now, mid-2025. Let's look ahead a bit. What does all this data maybe suggest for 2026? Is there any indication things might start to turn around, or are we likely facing more of the same?
Well, crystal balls are always tricky in real estate.
True.
But based on the trends and historical patterns, a really dramatic snapback recovery seems unlikely in the immediate future. However, conditions could begin to normalize, maybe stabilize, as we move into 2026.
What would need to happen for that normalization?
A few key things need to align. First, inventory levels would need to stop climbing and actually stabilize, maybe even start to decrease a bit. Second, buyer demand would need to strengthen meaningfully. That activity index needs to tick up. And third, a really critical factor is interest rates. If they moderate, that could certainly help affordability and demand.
And does history offer any clues on timing?
It does, somewhat. If we look back at previous market cycles, like the correction after 2008, Price stabilization often lags behind those initial shifts in inventory and demand, usually by about, say, 18 to 36 months.
18 to 36 months. So even if things start feeling a bit better with inventory or demand next year, prices might take longer to really firm up.
That's typically how it plays out, yes. So even with some potential normalization starting in 2026, expecting, substantial price appreciation or a sudden return to that bidding war frenzy, that seems pretty unlikely in the short term.
Okay, that makes sense. So let's bring this all back to the individual Austin homeowner listening right now. Knowing all this, the current correction, the potential timeline for stabilization, what are the real practical takeaways when making that seller wait decision? It sounds like personal circumstances are key.
They're absolutely paramount. There's no single right answer here. It really hinges on your specific situation, your finances, your flexibility.
So for someone who can wait,
if you have flexibility, meaning you're not under immediate financial pressure to sell, you don't have to move right away, and you can afford to hold tight, then, monitoring the market through the rest of this year and into 2026 might be advantageous. The data strongly suggests waiting could lead to more favorable selling conditions down the road whenever the market finds a firmer footing. The pendulum is just so clearly swung towards buyers right now.
But what about those who don't have that flexibility? Maybe a job relocation, family changes, need to access the equity.
Right, and that's a reality for many people.
Oh.
If you need to sell now, the good news is homes are still selling. Deals are happening. But, and this is a big but, it demands a very different, much more strategic approach than a couple of years ago.
Strategic how?
It means pricing realistically, even aggressively, right from the start. Don't test the market high. Be prepared for negotiations. Expect buyers to ask for concessions, repairs, closing costs.
So being flexible is key.
Extremely. Maybe offer incentives up front. And crucially, accept that your home might take longer to sell. Those extended market times we discussed. You need to factor that in. It's really vital to understand that sellers unwilling or unable to make these kinds of adjustments, well, their properties face a much higher risk of just sitting there unsold, adding to that inventory pile.
A very realistic perspective is needed. Okay, so just to kind of wrap up the main points. The Austin real estate market here in mid-2025 is undeniably in a correction. It's a buyer's market by most metrics, and sellers need to be pragmatic, strategic, and patient.
That sums it up well. Understanding the data like we've discussed today is really the best tool homeowners have right now.
Absolutely. So as we close out this deep dive, here's something for you, the listener, to think about. Given all this data we've unpacked, inventory, ratios, prices, demand, what specific market indicator do you think will be the most crucial one to watch over the next few months? Which number, if it starts to shift, would signal to you that a genuine change is underway in the Austin housing market, and why? Something to ponder as you navigate your own situation.